Now, Nigerian stocks outpaced their peers in Sub-Saharan Africa, gaining 6.4% month to date as of the end of May 2023. This is despite growing inflation and bleak economic data. For the first time since March this year, market capitalization climbed by 1.833 trillion naira to close at 30.366 trillion naira. According to market data, the NGX All-Share Index began May at 52,403.51 basis points and ended the month at 55,769.28 basis points, posting a 6.42% increase. This is a departure from March and April, when the market fell by 1.9% and 0.8% due to investor profit-taking, uncertainty in the run-up to the February elections, and rising inflation. Joining me for more on this is Oladipo Ajayi, Head Fixed Income with Chapelhill, Denham. Oladipo, welcome to Business Edge. Thank you for joining me.
Hello, good morning. Thank you for having me on this morning.
So let's start with this, because we saw a gain recorded in May, which many have attributed to the president's inaugural speech. He seemingly has said the right thing, that investors, particularly foreign investors, would like to hear about his plans. Is that singular move what seemingly changed the tide, or are there other things that we can point to in regards to this?
I think basically, if we look at how the market traded just a day after the president was sworn, you can categorically actually ascribe the upside momentum that we saw in the market to the statement from the current president. And statements like harmonizing the FS windows, statements like removal of subsidy, that is long overdue for foreign investors. A lot of them have been waiting to hear things like that, and decision and aggressive leader that can actually toe down and actually implement such statements. And when you hear such statements from an inaugural speech and with that kind of tenacity, I think that's one of the reasons why market quickly actually acted on that. And basically what we saw in the market was more of a local participation. The local player are just taking advantage of that to actually reposition themselves into the market while they are waiting for foreign investors to actually come into the market when this thing has fully been implemented.
All right, so as you said, we saw that post-rally. We saw one of the best one-day returns ever. This is about a week out from President Tinubu's inauguration. Is the honeymoon over, or have we seen that sentiment sort of staying somehow relevant within the market as it is right now? What are things looking at this morning?
The sentiment is still very much in the markets. Nobody is in the market to sell as we speak. A lot of people are holding their positions. Because imagine someone that just took a position last week, such person will not be in haste to actually sell out what you are currently holding. A lot of people are holding some of these positions in anticipation of when foreign investor will actually be storming the market. And you are not expecting the foreign investor until when we are fully implement the foreign exchange window harmonization. And I think that's one of the reasons why a lot of people are still holding on to their position. As we speak, market not aggressively bullish, but we keep seeing a bit of cherry picking across instruments.
All right, so you mentioned, of course, he said things that the market wants to hear, both local and foreign, but he also said something that Nigerians have been reacting to, and that's the fact that his administration will go forward to remove fuel subsidy, which was not provided for in the Buhari administration's last budget. But beyond that, have we seen the impact of that announcement or that reaffirmation of the removal of subsidy on the oil and gas index?
Of course, if you check the oil and gas index last month went up by about 18.7%. And that's the landmark movement when you look at the index. And you see stocks like Itana Oil, Oando, you see corn oil actually picking up last week. And that has still been the momentum in the market. So it already tells you that investors are already taking position across those stocks and actually positioning to actually take advantage of what would be the aftermath of the implementation of the removal of subsidy. So the market is feels that most of these companies will actually will benefit them positively. It means that they can make better return than what they are currently making in the market. And a smart investor will always want to put their money in such instrument, and that's exactly what's happening in the markets.
All right, so let's look at what happened at the end of last week's 4 trading days. Of course, one day being because of inauguration. Now, all 5 Tier 1 Nigerian banks posted positive market sentiments, with Access Holdings PLC being the best performing bank. It was also a rewarding week for Fuga's investors as they gained a total of about 126.86 billion naira. So would you say it was also the president's speech that was responsible for this rally, or is there something else we need to look at?
Of course. Anything that happened post that statement is the president's statement. It's fully because I remember entering the market was fully bullish. You can see the momentum was so more high, and it was not that market started aggressively, and maybe towards the end of the market you start seeing a slowdown. It was aggressive trading throughout the day. It tells you that there's a fundamental thing that actually driving the market at that particular day. So it is simply the statement by the president that actually drove the market. And like I mentioned, those are the things that market has been waiting for. Market is just waiting for someone that will actually bite the bullet on those issues. And it's great that the current president decided to actually throw that out.
Okay, I want to get you deeper into what the expectations of the markets is. But before that, in terms of the fixed income market now, it's Monday. We're looking at the rest of this week. Sentiment, as you said, is still carrying over from last week. What do you think we should expect in this coming week?
Yeah, for fixed income markets, a lot of things have been driving the market, and basically what drove the market aggressively last week, you can attribute that the release of another calendar for the month of June. Initially, the DMO at the beginning of the quarter released that calendar for the quarter. And for the month of June, they are supposed to be offering the 2028 maturity, the 2032 maturity, the 2042 maturity, and the 2050 maturity. But towards the beginning of last week, the DMO released another calendar for the quarter. What they actually did was they removed all the 4 instruments and actually replaced them with new instruments. So what we have on the calendar now is the 2029 maturity, a new 10-year bond, a new 15-year bond, and a new 30-year bond. So that actually drove what we saw, that aggressive impact in the market last week. A lot of traders are now picking some of those instruments that were supposed to be on the calendar because they are now off the run instrument. They are no more on the run. So maybe there are some portfolio managers that are looking at actually participating in the forthcoming bond auction, and they are looking at buying some of these instruments. But because these instruments are no more on the calendar, they are no more on the calendar. So we have seen most of these PMs coming to the market to buy some of these instruments. And we feel that this will likely continue this week because if you look at the momentum at which the market closed last week, we feel that it will continue. And what we expect that we'll continue to see people coming to the market to cherry pick instruments across maturities.
All right, so Oladipo, some analysts have predicted that we might start seeing the return of foreign investors to the markets, hopefully increasing Nigeria's foreign portfolio investments. And you've talked about the fact that local investors are holding now because they're also holding on to this same expectation. Talk me through what the expectations of the markets are. You can segmentize it into what the local market is expecting, what the foreign market or investors are expecting from the Tinubu presidency.
Yeah, if you look at the reaction of the markets just a day after the presidential statement, you will notice very well that the market actually, that's exactly what market was expecting. Market was expecting a single effect window. Market was expecting a situation whereby subsidy will be a thing of the past, because what that is putting, that's actually putting a lot of burden on the government. If you look at the level that the borrowing of the government for the year, if you look at the total budget, and you are looking at a north of 20 trillion, and the expected revenue is just about 9.something trillion, it means that the government will borrow over half of the budget in the market this year. And now considering that the budget for subsidy is just for half year, and by the time you start building the remaining part of the year into it, meaning that we'll see a situation whereby the government might be borrowing up to like about 15 trillion a year. So it's not something that is good for any economy. And that's one of the reasons when the government made that statement, it sounds like a positive thing to the market, and that's why the market actually reacted in that line. And also, when you look at FX as well, most foreign investors have not been coming to Nigerian markets, and one of the reasons is simply because of FX. Imagine a foreign investor coming to the market at 465, and in no time, maybe you ended up devaluing the currency, and they now have to go out at 700 or 760. It means that they've actually lost half of their investment into exchange loss. And I doubt there's any instrument that they will invest in Nigeria that will give them up to like 50% or 40% of what they have lost in the market. So that's one of the reasons why a lot of foreign investors would rather go to Kenya or Egypt than coming to Nigeria, despite the fact that there's a lot of value in Nigerian market. But the statement by the president that they are looking actually to harmonize the exchange rate window sound positive to most of these foreign investors. We'll be getting calls from most of these foreign investors looking at most especially when one of the dailies actually released that the CBN has finally devalued currency before the CBN came actually to rebut that statement. Yes. A lot of foreign, we got a lot of call from foreign investors trying to confirm that because they feel that immediately that is done, it's like the coast is clear for them to start coming to the market. So that the coming foreign investor will come to our market is constant. What they are just waiting for is for us to actually harmonize the FX rate and open the window for them to actually come in.
All right. So before I let you go, very quickly, and with, as you said, we're in the second half of the year, financial year going on, new administration as well, probably some departure from how President Buhari used to do things concerning the economy. What are the trends do you think that will influence and inform markets' performance this year? What do you think we should be looking out for?
I think there are a lot of things that will influence market performance. One of the things is the harmonization of the FX window. It will be key dynamics for market direction for the year, and also the performance of companies too will be a great determinant of how much market will perform this year. In no time now, we'll soon be expecting maybe by the end of June, towards the beginning of July, we'll start expecting most of these companies to start posting their half-year result, and that will be one of the catalysts that will actually drive activity in the market this year. And so also in the fixed income space as well, the direction of the posture of the CBN, which is the apex bank, and coupled with the Monetary Policy Committee, will go a long way in determining how the fixed income market will trade this year. We've seen institutional, also in part of the statement made by the president was that currently the current interest rate environment is not palatable for business activities, and also thinking that we need to look into that direction. And those are some of the key indices that will drive market activity this year. So it is the performance of company, the direction of the apex bank, the Monetary Policy Committee posture, and coupled with the implementation of some of the statements made by the president that will be the catalyst to drive the market for the half year. Thanks.
All right. Thank you so much, Oladipo. We'll be looking out for those things, and I know a number of these issues will be back to talk to you about them again. Thank you for your time today.
You're welcome.